I was talking about the Indian rupee, which has hit its 6-week high and it closed around 83.1 against the US dollar. So this is happening on the back of that dollar sale from several foreign banks. Also, net FPIs buying more than 4,600 crore rupees in the markets. And at the same time, the 10-year bond yield has jumped to 7% in the last session. It's happened on the back of that bumper dividend check written out by the RBI to the government. So with all these cues combined with the new life highs we are seeing on the bourses today, the Nifty running up to the kind of levels it has, is it really time for the Indian currency to get stronger? Let's find out. Jamal Mecklai is joining us. He's Managing Director at Mecklai Financial Services. Good evening, Mr. Mecklai. This Friday evening. Pleasure you could join us. And yes, I was telling our viewers how we've seen the Indian rupee strengthen the most in 5 months against the backdrop of our charged up equity markets. Also, the huge dividend payout by the RBI to the government, which has crossed 2 lakh crores, the largest dividend check ever written out by the RBI to the government. So the question is, are these factors going to help get the rupee to strengthen even further against the US dollar, you think?
Well, I mean, as everyone knows, the rupee has been sort of sagging, for the last several weeks.
Yes.
There's been a lot of uncertainty over the elections. And while nobody knows yet, but clearly the sentiment appears to have changed. And the key point, as you said, is that huge dividend check delivered to the government by RBI, which should help control the deficit, which should keep interest rates down, which means investments in debt are that much more appealing. So a lot of money has been coming in debt for the last, really since January. In April, there was a lot of nervousness and money went out, but I think debt flows are coming in again. And that's doubtless what has propped the rupee up. It's interesting that, to my mind, I think RBI should have been a little more flexible in its intervention. In the past, it did not allow the rupee to strengthen. But it appears that they are more comfortable with that. So that's a good sign. Now, how much they will let whether there will continue to be this huge inflow pressure and whether RBI will allow the rupee to continue to strengthen is an open question. But the thing we need to recognize is that come June 24th, I think, when India gets registered in the JP Morgan bond index, there's a huge amount of inflows expected. So it's conceivable that the rupee will remain steady for sure, but perhaps strengthen some.
The RBI allows the Indian rupee to strengthen, which you said it hadn't been doing in the past. And if there is this policy continuity, because FIIs were, pessimistic about the outcome of the general elections, and if they are pairing their pessimism and staying invested or coming back into Indian equities, how much of an impact will that, combined with stable oil prices, how will these factors play out on the Indian rupee?
See, first and foremost, I'm not sure the money is coming into the equities. The equity markets are doing great because of SIP, right? I read somewhere that they have only 17% of our equity market is now held by foreigners. It used to be well over 60, So to my mind, I think it's really the domestic market that is keeping the equity market high. No doubt some, equity flows have come in, but the money is coming into debt, which is really very good. Right? It's not all, there's a lot of positives, but ultimately FDI has been slowing down. So the fact is, and exports are not doing great. Although I think the electronics goods exports that they're working on appears to be a pretty strong force. So I would say, frankly, it's good that the rupee has strengthened by about 50 paisa. I think basically the point is, for there to be a reasonable market where companies do not end up taking too much risk, there needs to be two-way movement, right?
Yes.
So RBI, I think, needs to change its intervention process to become a little more like an international currency,
right?
To where we could see the rupee perhaps strengthen, to 82.50 and maybe come back to 83.50,
right?
And move in a range,
right,
rather than being in one direction.
So what will help, Mr. Mecklai, what will help the RBI change its intervention policy? There is the dollar stockpile that the RBI has, which is now at a record high. It's close to $650 billion. Is that going to help?
Well, they've got that. They've had that. It's gone up. It's been going up steadily. So that's not been a problem. I think personally, I think that the reason RBI has been really holding the rupee tight. I mean, the volatility of the rupee is the lowest it has been ever, right? And I'm saying that's not a good thing. In fact, you may remember, I think some time ago, the US Treasury was talking about naming India as a currency manipulator. Now, that's sort of died down, but particularly if Mr. Trump comes in, I can see that starting up again. Now, RBI, my point is we don't need to do that. We don't, it's fine if we have a market with little volatility. I mean, because what the importance of volatility, it keeps people honest. If the rupee is just sitting at 83.50 as it had been for a long time,
yes,
nobody hedges.
Right.
And when it suddenly turns like it just turned, a lot of people lose money.
There'll be that much more action.
So it's really important that RBI is sensitive.
Correct. But our export scenario, that hasn't seen as much improvement in recent times. So in terms of the kind of intervention that the RBI has done with the domestic currency, how do you think that's going to play out on trying to improve our trade deficit? Because as the trade deficit improves, you see more power come to the local currency, doesn't it?
Fact is, currency is only one dimension of exports. I mean, if the rupee was at 85, it doesn't necessarily mean our exports would go up commensurately, right? A lot of our exports of commodities, for example, which you would get no value in terms of the dollars coming in. Only exporters would make more money. And I think that you can't just simply yank the currency down to promote exports. There's a lot of other things we need to. We talk a lot about ease of doing business. It's been improving, but it's still a long ways to the bank.
Yes.
Labor. I mean, there's lots of people know what needs to be done.
Right.
And the continuity in government, if it does happen,
yes,
will probably help.
Yes.
But of course, the 4th of June is
yes, it's not too far away. It's less than 2 weeks away.
Then.
It's less than 2 weeks away.
Right.
But, if there is continuity, Mr. Mecklai, with the high dividend payout that the government has received from the RBI, will it spur the government, you think, to spend more? Will they be content to simply reduce borrowings through borrowing through treasury bills and even buy back more bonds with that kind of liquidity that the government would have?
The amount was so huge, they can do both, right? They can use part of it to reduce the deficit and part of it to spend. But I feel the whole approach of government expenditure has been wrong. I mean, this is the old trickle-down theory. You build infrastructure so everybody can see it, tali bajao, but look what's happening on the ground. There are no jobs and inflation is high. See, I think the big problem is really inflation. When I was speaking earlier about the intervention, I did a little analysis about a month, 2 months ago. And if over the last 3 years, RBI had allowed the rupee to simply follow the dollar, right, it would have been about 4 or 5 rupees stronger than it is today.
Correct.
Now, if that were the case, inflation would be low. And I think RBI needs, they've got, it's very easy for me to sit here and carry on, right?
Yes, of course.
They've got several different moving parts that they've got to work with. But I feel, and they've done a good job with inflation.
But if you're conceding that the RBI has, Mr. Mecklai, if the RBI, you concede, has done a good job and you need to be competitive, especially among the emerging markets, how exactly do you think it has been using the kind of swings you see in other peer currencies, how the Indian currency has been managed? Because you mentioned that we have limited kind of swing. And if that is going to help us climb faster or make it that much more competitive against emerging markets, isn't that a good thing?
See, I'm not sure that it does that. That's my point. I'm not sure, if you make the currency weaker by 2%, exports will go up by 3%, right? It depends on a lot of things. It depends on the state of the global market. It depends on the kind of exports you have. In fact, it's interesting you should mention emerging markets. I'm working on another analysis, and I was looking at the rupee, the Thai baht, and the Philippine peso, right? And if you look at the three currencies, you look at the volatility chart of the three currencies, the baht and the peso, all of them have weakened as the rupee has weakened, but they look like more real currencies, right? The rupee looks managed, excessively managed in my view. And while, hey, like I said before, RBI has done a good job, and hey, but everyone can do better. And I don't think that the simple equation that a weaker currency is going to give you more exports is something that even RBI is thinking.
Right.
So the weaker currency also creates higher inflation.
So at this point in time, what's your assessment? What's a good level for the Indian rupee to be at against the US dollar? And what is the outlook on the bond markets?
I've been in this business a long time, as you know. And I have learned one thing, which is nobody, including me, knows what's going to happen tomorrow. So where the rupee is going, I have no idea.
All right.
And the other lesson is you can forecast a level, but not a time. So I would say, just putting my hat in the ring.
Yes.
I would say, let's say over the next. See, because there's lots of other forces in the world.
Yes, of course.
That will affect the rupee, right?
Of course.
There is the DXY, there's the dollar. Right?
Yes.
Now, my personal view is the dollar is going to weaken.
Yes.
Right? One of you mentioned oil a while ago.
Yes.
It's very strange that oil has all this madness in the Middle East, and oil hasn't gone up.
Correct.
Right?
It's remained fairly
stable. The
third
weird thing is gold.
Yes.
I mean, gold is so high.
Yes.
I mean, it's twice the price that it cost to take it out of the ground. So I'm saying and the fourth and I guess key thing for the market is the U.S. equity market.
Right.
I mean, it touched 40,000 and it cracked.
Yes, it
and
is.
My sense is that's going to fall very sharply.
Right.
So there's two conflicting forces from the global side on the rupee. One is the dollar index, which I think is going to weaken.
Right.
And the global equity markets, which are going to crash. So they will have conflicting forces. So I think we will see some volatility, more than we've seen recently. Mm-hmm. And in terms of a range, I'd say 82.50 to 84.
Yes. Well, we know how long you've been in the business, Mr. Mecklai, and yes, indeed, it is hard to tell exactly with the kind of moving pieces that we have right now, the several factors that are going to affect the ebb and flow of the Indian currency. We'll see exactly how much strength the current kind of growth factors that are at play, whether you talk about the dividend payout or whether you talk about the strength in the equities, how much more of play is going to come about to bring further strength to the Indian currency, how much the RBI is going to intervene in the future. All of that remains in play, but it's always very useful to get in your perspective on the currency markets. Pleasure having you with us as always, Mr. Mecklai. Thanks for joining us.
If you like this video, then like, share and subscribe to ET Now.